Good afternoon, Blue Line Traders. I'm Sean with Blue Line Trading, and this is your weekly watch list video for January 30th of 2023. If you saw the watch list that we sent out last night in the chat room, I just want to remind you guys that this is probably going to be a pretty crazy week in the market. It's also going to be a pretty busy week for us here at Blue Line Trading, which is why we're probably not going to have that much content coming out this week. So this video is going to be very thorough. So with that said, let's jump right into things. Starting with the weekly trade report. Last week we saw really ideal market conditions for trading. We saw lower volatility because of the Fed blackout week, but at the same time the market continued to trend within our forecast, and that was likely due to the rotation we were seeing into tech names because of earnings. Now, regardless of the conditions, we crushed it last week. We put on an excellent performance for our members, which was very educational, and overall we're happy with our performance. So where does the S&P currently stand coming into this week? Now I want to remind you guys we're not including today's price action yet. We'll do that when we go over the daily market update portion of the video. At the beginning of last week, we forecasted a pullback in the S&P 500 towards the 3960 zone. The market gave us that pullback with a beautiful pin bar candlestick on Wednesday. Now from the 3960 zone, we forecasted a move back to the upside, with the next fractal target within the market being around the 4200 zone. Thursday, we began that move towards that zone, and on Friday, we saw pretty strong resistance at the 4090 zone, which was anticipated, and the S&P closed the trading week at the 4085 level. Now, despite closing under resistance, the internals are strong, and we do believe that buyers have the strength to possibly make it to the next target, which again is the 4200 zone. Now with that said, because we did see a close below strong resistance at 4090 on Friday, we could be looking at a marginal pullback on Monday to search for liquidity. A pullback on Monday is not guaranteed, but what we can tell you is that once the 4090 level does break, and if it breaks, the trip to 4200 should be pretty quick. Other things that we will be watching this week, just like last week, we should be keeping an eye on the Dixie, as there's still evidence of a bullish reversal on the horizon, and we should also keep a close eye on the VIX as it's trading near its lows and there's clear bullish divergence building on the higher time frames. Next, we're going to jump into our theories, and again, I want to remind you guys, this does not include today's price action. We want to make sure that we're showing you the entire process of how we do things for educational purposes, which means that we're going to show you what we anticipate over the weekend. And then when we go into the daily market update, you'll see how things are being affected and if they're being followed or not. Now, theory number one does look a little bit different than last week. We still have a three-wave movement to the upside, but because the substructure can be counted two different ways, we are now saying that this can either be an ABC to the upside or a WXY count to the upside. They're very similar. They have a very similar target, which is going to be between 4,300 and 4,400 on the S&P, but the substructure could look a little bit different. And once we go into the daily market update, you will see how today affected that and which way we are leaning. Coming into theory number two, I want to remind you guys that both these theories from the all-time high on the S&P 500 on a larger degree are three-wave corrective movements to the downside, and they both involve more downside and new lows. But theory number one shows a lot less price action, which is why it looks a little bit different than a three-wave movement to the downside on a larger scale. Theory number two does show a lot more of the theory. It shows it all the way from the all-time high to the target, and the reason why is we had to show that to give you a better idea of what the theory is suggesting. When we put these theories, we try to put the least amount of information to keep things simple for you guys so it makes trading easier. Now, jumping into theory number two, it suggests that we're in an ABC large degree structure to the downside with a target around the 2500 zone, but could go a little bit lower. And it suggests that we are already in the larger degree C wave towards new lows, and we should be breaking the current low pretty soon. Coming into the economic calendar, I want to talk a little bit about volatility. Here at Blue Line Trading, we refer to volatility as the speed of the market. And the speed of the market is going to either make trading more easy or more difficult. And when we look at the current market that we're in, there's clear evidence that economic data has a direct link to the speed of the market, the volatility. And we kind of proved that last week. We had a Fed blackout week and things kind of slowed down. So coming into this week, with the Fed interest rate decision and unemployment data and all kinds of very important economic data coming out, we should see a spike in volatility, which is going to make this week a little bit more challenging than normal. So keep that in mind when you're trading. The last thing we're going to do before we jump into the daily market update and then circle back to our tickers is look at how the Nas and the Dow fit into things. Now on the screen you have the weekly charts for both the Nas and the Dow futures, and you'll see that the Nas was a lot stronger than the Dow last week. And even though on the larger scale the Dow is stronger, we're starting to see signs of weakness, which means that we do have to be cautious as we go higher. It also suggests that we could see a pullback this week because the Nas does look like it's getting a little bit extended on a larger time frame. The last thing I want to mention in this is because we're starting to see weakness in the strongest area of the market on a larger scale as we go higher, keep in mind that the Dow stocks and things that follow the Dow are going to be prime targets if and when this market flips bearish. Moving into the daily market update, we are starting on the S&P futures chart ES1 on a 15-minute time frame. I've got your Friday close marked right here. When we follow the median line, which is the red line, you'll notice that the overnight session last night was 100% net short, and we saw immediate bearish pressure upon the open, which pushed the price action down, and sellers did have conviction initially as they took out the low of Friday at the 40.61 zone, and they pushed below and put in the overnight low at the 40.40 zone. From there, buyers did buy it up, and buyers actually bought it up so aggressively that they got it back above Friday's low, which means that the conviction coming into the open was failed, and that we should be looking for some type of median correction or inventory correction from the buyers. And upon the open, that's what we got. But that inventory correction was a very weak back test. It did not make it all the way back to the median line. And you'll see on this 15-minute wick right here that we had a pretty strong rejection of higher prices on lowering volume. Now from that point, we did see bearish pressure that pushed us down in a sustained downtrend that lasted the entire session, and we closed at the lows of the day, and we're currently trading there in tonight's overnight market. The big question of the day is going to be, with the bearish pressure that we saw today, should we still be looking for this rally to continue and hit our target in the 4,300 to 4,400 zone on the S&P? And if not, what is going to be the indicator that tells us it's not going to happen? And to answer that, we're going to look at all the evidence that's available to us. Starting with the price action, and we'll start with the overnight price action, which is in the green box, it's going to be bearish. And the reason it is bearish is, first off, you'll notice that the opening prints were the highs and the closing prints were near the lows towards the end of the session, which is the definition of a downtrend that sustained and lasts the entire session, telling us that sellers were in control most of the time. It's also bearish because we had a previous low right here, and that previous low was breached. Moving into the daily session price action, it is also bearish. Again, the opening prints are the highs and the closing prints are the lows, which again is the definition of a downtrend. Now, we did see conviction in the overnight market, but coming back into the open, it was failed. This failure created an inventory correction, which created a lower high. That is also bearish because we got follow through to the downside, which took out the overnight low. So that is why the daily session price action is also bearish. When we come down to the intraday volume, you'll notice that there's a lot more red than green in here, which tells us that sellers had a lot more control of the market today. When we pull up the session-based volume profile, you'll notice that we have a lower point of control and a lower value area, and the session-based volume profile shape I'm going to call a uppercase D, which tells us that when combined with this right here, the intraday volume being more selling pressure, there is a good chance for continuation from here to the downside. Moving over to the daily time frame to look at our daily candlestick location and structure, they are both bearish. The location is bearish because we are coming up, we have a rejection at resistance right here, and then from there we come down, and this pattern forms that evening star reversal type pattern, which could see follow through. The structure is also bearish because we had a higher open than Friday, but a lower close, which again suggests that more downside could be coming. When we come down to the daily volume, it is also a red flag for the buyers. This is a tick up in volume as the price is coming down, and it's a lot higher than when the price was coming up, which again is bearish and would suggest that sellers may have more control of this market than what they were leading to believe on the way up. Moving over to the market internals, starting with the VOLD, sellers had a pretty strong day. Now initially there was a lot of chop in here, but as the session grew, you'll see that it became more trending to the downside, and they did break the benchmark, which would suggest that follow through to the downside is possible here. The other thing that we need to be cautious here of is, as of recently, the volume has dictated the shifts in control in the market, and they've been gradual. But you'll notice today we had a very abrupt change in not just the sentiment, but the control of the market. It very abruptly went from buyers shifting slowly to a snapback reaction towards sellers, which would suggest that it's possible that the market behavior is changing. And typically when that happens, it could mean that we are in a major pivot point in the market. Coming down to the ADD, we opened out of balance to the downside, and this pretty much confirmed it. We had that inventory correction, and then we kind of just tapered off all day. Now, one thing I do see here, which is good for the buyers, is we opened here and we never took out the low. On SPY, we came up and we did take out the low, which means that this movement down is not as healthy as some would believe. There is some weak market breadth to the downside. The other thing that I see here is when we come up to the tick, it actually favors the buyers today, just marginally. And when we look at the cumulative strength portion of it, sellers did not really build strong cumulative strength today. So even though that we had a strong trending day volume-wise, control-wise, it actually wasn't as bad as one would believe. What we need to see is what happens tomorrow, and if this is an abrupt shift, and then we see really strong downside control from sellers tomorrow. Coming up to the S&P sectors, everything is pretty much red, which would signal that some cash is leaving the market and risk on is leading to the downside, which would suggest that follow through is a lot more possible here. When we combine all the evidence available to us, it's pretty clear that on Friday, something changed. We have this wick, which is a rejection of higher prices, and then today we came down from here. So it's pretty safe to say that we're in some type of pullback. And when we look at today's evidence, it says that that pullback could go a little bit further down or a lot further down. Now, there's a case for both. I have our second theory up on the screen right now, which is the ABC theory to the downside that suggests we're already in the larger degree wave C coming down, and we should be seeing a rejection probably here. And originally, we were saying that this was potentially the top of wave 2 and that this was a flat correction, and that's why there was a high here, and then the pullback, which was your wave 1 of wave 3, and then we came up. Well, if we measure and include this wick up here as a high in the top of wave 2, then the 786 retracement of this lesser degree wave 2 actually lines up perfectly with Friday's rejection. Now, the problem I still have with this theory is wave 3s should be the most powerful movements in the market. And that's what we're in on a higher degree and on a lesser degree, which means that we should see massive volume coming in. And it's not too late for that volume to come in, especially with the Fed rate decision this week. But what we would need to see to confirm that is like volume like this, like tick up and huge volume. Because remember, this should be a very powerful movement. And that would be a pretty good indicator that we're going to lose this low and lose this low and go to new lows. The other theory, and I'm going to go to a clean chart to go over this one, suggests that, again, we're in a three-wave movement to the upside, and it could look a few different ways. On the watch list, we drew it like this. And then we're coming up, and the 100% extension is somewhere around 4,400, right? Now the problem I have with it being counted this way, and this is a pretty clear three-wave movement right here, you can count it that way, and then we don't really have three waves right here, and this is kind of short, and this gets kind of messy right here. That's the problem I have with this. And it brings into question if we're still in this first wave right here, and maybe this is not a three-wave movement right here. Maybe this first leg up is something similar to this, where you have your 1, 2, 3, 4, and now we're coming up in 5, and that is why we were telling everybody, look at the 4,200 zone, because the wave 5 target would be right around 4,207, which would look, and I'll redraw this so you can see it better. So 1, 2, 3, and then 4, pull back, and 5. And on a larger degree, yes, there's a violation here, but on the weekly, it actually works out pretty well. And then we would be looking for a more substantial pullback in a three-wave movement. And then the next level, going up towards our target. And this would actually make this a lot more bullish, depending on how aggressive the pullback is here. And then the reversal to the upside, we could get a really good idea of where our actual target is. Based on the volume profiles, it's still probably in the 4,300 to 4,400 zone, but it would take a lot longer to play out, and it would be a lot more frustrating for people who think this market is going to go immediately bearish. Now within this substructure right here, if this is a 5-wave movement coming up, then you would be looking at something similar to this, where this is your 1, 2, and then I would say this is 3. We're getting 4 right now, and then we would come up towards our 5. So to answer the big question of the day, I'm still leaning towards this being our overall theory, that we're on some type of rally, and that rally is not over, but there's going to be some turbulence. Now to answer the second part, what would invalidate that? Well, we have a wave 4 pullback, right? And it does suggest it could go lower, so where's the invalidation point where we need to start questioning things? Well, when we pull up a retracement and go from the bottom of 2 to 3, it's right around 4,000 is the 382. So I would like to see this market hold the 4,000 level. If it doesn't, we need to start evaluating either this being complete right here and we are coming down, but for that to be the case, I would have liked to take out this high right here. So I want to hold the 4,000 area. If we don't hold the 4,000 area and we start to see major volume coming in like we would here, then I'm going to start questioning things, and that's when we need to be cautious of more downside. So all eyes this week are going to be on the 4,000 level, and I do think we're going to pull back a little bit further. Moving into our watch list tickers. Now the first is NVIDIA, and NVIDIA is a carryover trade. We're seeing moderate conviction and an inverse head and shoulders, and you can refer to the watch list to see what that looks like. And we have this volume gap that on the profile, let me see if I can get that to pop up here. There it is. And the target for that volume gap is at 220. And off of this move right here, you have a 100% extension, which lines up with it. It's a pretty high conviction trade. Now on top of that, we're coming down here and you have POC confluence, and you have this level that lines up with the neckline. And we came up, we found resistance at 206.50, which again, we had mentioned, I believe in one of our videos last week, to watch the 205, 206 area, and that had to do with dark pole levels. And then we got a pullback today. And in the watch list, we said look for a potential pullback based on the evidence and how the rejection was looking down towards the breakout level around 191. And look where we're trading today. Volume is ticking down on the daily. The RSI today came down to the moving average, and it looks like it might find support here. When we look at the ADX, it's still pointed straight up. Yes, the ADX green line's pointed down. This is just marginally ticking up, but We just had a kind of a bearish day today and the market was pulling back. Now, tomorrow, the S&P might pull back a little bit more. The greater market might pull back a little bit more. We've already discussed that in the last portion of the video. So with that said, we could come down a little bit further. What I would like to see here is if we come down and violate the 8 EMA and even the breakout level, I'd still want to see a close above it. And if we don't get a close above it, I'm probably going to take off any positions that I have and wait for more information. Potentially. We'll see how that goes. But ultimately, if we regain it right away, then it's probably just a test for liquidity, but we have to see what it looks like. And again, I'm saying that because volume ticked down today. So I'm thinking this is a back test, but with the volatility this week, it could be a really messy back test, which means that it might fake a lot of people out. And it did that right here. I know of at least one member who took this trade and stopped out because of this liquidity test right here that came down, wicked off, but we still got the close above. So still bullish here. I'm thinking we're still going to get up here unless we get a close with conviction down and it's a failed breakout and we really come down. But the volume's not telling us that that's going to happen yet. The internals are not telling us that's going to happen yet. So keep all eyes on here. I think this is still bullish. Next, we'll bounce over to the SPY, which is on the watch list. And we said look for a pullback this week on Monday towards the, I believe it was the 395 level, but let me confirm that. Yep. Point of control kind of lines up with 395. So I'd be looking down here. And again, right here, I would like to see either we hold this level tomorrow and go, which I don't think is going to happen because the market does look more bearish and it looks like there's more downside. But if we come down, I would like to see at minimum a lower wick or a really bullish reversal and we close above the 8 EMA. Because remember, the 8 EMA is what a lot of these trading algos work off of. If we're trading below it, they're going to be bearish. We're trading above it, they're going to be bullish. We had a sudden shift today and we're sitting on it. And there's evidence that we're going to go down further potentially. So I do think we're going to violate this, but we're looking somewhere in between the 8 EMA and this point of control, hopefully for a reversal. If we don't get that, things could get more bearish. And that would be the theory here most likely. So trade accordingly. But again, remember, this is probably going to be a more challenging week. So if you get a clear signal down here and you want to go long, you can. But remember, this is not going to be the easiest week to trade. But this is the safest money because it's going to be lining up most clearly with our forecasts. Last is going to be Amazon. And this is going to be the new trade of the week. So let me pull that up. And I am bearish on Amazon. And one of the main reasons I'm bearish Amazon is, let me go over to the weekly to make this a little bit more easy to read. Came down, this area was support. Came up, came down, now it's acting as resistance. That's bearish. And we have earnings on Thursday. Now, one thing I want you to keep in mind is this right here is not an exact level. So we're going to redraw it. And we're going to make it look more like, let's do this. We'll call this the level in question. We could land anywhere in this level, reverse, and still be bearish. And I believe this level can go as high as a supply zone, 109. And still reject and fall back into the box that we just drew and then go bearish. Now, one thing that we need to look at is we have some type of potential three-wave movement right here. So let's measure that. And look, what do you know? 109 is a 100% extension here. So as far as earnings go, I don't like to swing through earnings, and I'm not going to swing through earnings. And again, earnings are on Thursday, but I'm known to play a reaction here and there for earnings. And I'm thinking here, a potential is either we never break this zone and earnings are bearish and we come down, and that's a shorting opportunity off of this. And that makes it a lot cleaner because you have support right here and you have backtest rejection of resistance right here. That's a short signal. Technically, you go short right now, and I, in normal circumstances, probably would, because I place my stop, depending on where my the overall target is. But with earnings, I don't really want to do that. That's a little bit too much risk for me right now. I don't feel like giving back a bunch of profits because we have been having a pretty good year so far. So I'm looking at playing the reaction. And what I'm thinking could happen is, again, if it's bearish and we kind of just trade sideways in here up into the earnings, we just dump on earnings and it goes. Or, this market hasn't been easy and this is likely to be a volatile, crazy week, a challenging week. I could see this going up to 109 or 106 in that area, rejecting, and that being the shorting opportunity, and then we break down. That's a very strong possibility. And another thing you want to look at here is you have this high, you have this low, which means that this is a bounce, and the rejection for this to remain bearish should be the 382. That should be a line in the sand as far as closing goes on a weekly time frame, and even a daily time frame. We'll pull up the daily right now. The 382 lines up, it closes up the gap right here. It's very telling. So I'm looking at 106, 109 as very important levels of possible top fishing zones to go bearish. So that's the trade idea that I have here. That's pretty much all I have for you guys today. Remember, this week is going to be busy for us, so likely, I don't know if there's going to be any more videos this week, but I will have written content coming out in the chat room. So if you're not a member, use the links in our bio, join. There's no cost involved, and you'll have access to everything we're putting out. All right, I will see you guys throughout the week.